Tired of being broke? Struggling financially? Building wealth isn't about getting rich quick. It's about making your money work for you. One of the smartest ways to do that is by investing in dividend-paying stocks. In this video, I'm breaking down my top 10 dividend stock picks for 2025. These aren't just random companies with a decent yield. We're talking about businesses with strong fundamentals and potential for future growth. So, if you're ready to start generating passive income and watch your investments grow, stick around. This one's for you. Alright, kicking things off with a true legend in the dividend world, Realty Income, ticker symbol O. They call themselves the Monthly Dividend Company for a reason, folks. This REIT focuses on owning and leasing out commercial properties. We're talking about those essential businesses you see everywhere, grocery stores, pharmacies, even gyms. First off, that monthly payout. Instead of waiting every quarter for a dividend, you're getting paid like clockwork every single month. With a current dividend yield hovering around 5.5%, that's a nice steady stream of passive income. Realty Income has a long history of paying out dividends consistently, and their business model is built for stability. They sign long-term leases with their tenants, providing a predictable stream of rental income. If you're looking for a set-it-and-forget-it dividend stock that pays you like clockwork, Realty Income is definitely worth considering. Next up, we're diving into the world of telecommunications with AT&T, ticker symbol T. This one's a bit of a high-yield play with a dividend yield currently sitting around 6.5%. AT&T is a giant in the telecom industry, providing wireless services, internet, and even entertainment through Warner Bros. Discovery. They generate massive cash flow, which is essential for supporting those juicy dividends. However, AT&T does come with a bit more risk compared to some of the other stocks on this list. They carry a significant amount of debt, which can be a concern for some investors. But AT&T is aware of these challenges, and they're actively working to adapt, investing heavily in their 5G network and fiber optic infrastructure. And let's not forget about their dividend history. AT&T has been paying out dividends consistently for decades. Sticking with the telecom sector, let's talk about Verizon, ticker symbol VZ. If you're looking for a slightly less risky play in the telecom space compared to AT&T, Verizon might be more your style. They offer a slightly lower dividend yield, currently around 6.3%, but with potentially less volatility. Verizon is known for its strong, reliable network, and they've been a dominant force in the industry for years. One of the key advantages Verizon has over AT&T is their lower debt load, giving them more flexibility and reducing their risk profile. So, if you're looking for a reliable dividend payer in the telecom sector with a strong track record and a bit less risk, Verizon is definitely worth a look. Moving on to a true titan of industry and a dividend investor's dream, Johnson & Johnson, ticker symbol J&J. This healthcare giant is not only a household name but also a dividend king, having increased its dividend payouts for over 60 consecutive years. Johnson & Johnson's dividend yield might seem modest compared to some of the others on this list, currently around 3.1%. But it's all about the growth. J&J has a remarkable track record of raising its dividend payments year after year, often at a rate that outpaces inflation. Johnson & Johnson is a massive, diversified healthcare conglomerate with products spanning pharmaceuticals, medical devices, and consumer health goods. This diversification provides a level of stability and resilience, even during economic downturns. So, if you're looking for a blue-chip dividend stock with an unparalleled track record of dividend growth and a rock-solid business, Johnson & Johnson is a no-brainer. Let's face it, some things in life are just essential, like toothpaste, laundry detergent, and razors. And that's where Procter & Gamble, ticker symbol PG, comes in. This consumer staples giant owns a portfolio of iconic brands that you likely use every single day. Think Tide, Pampers, Gillette, Crest, and so many more. People need these products regardless of what's happening in the economy. This consistent demand translates into stable cash flows for P&G, providing a solid foundation for their dividend payouts. Currently, P&G offers a dividend yield of around 2.4%. So, if you're looking for a reliable dividend payer with a portfolio of essential products that people rely on every day, Procter & Gamble is a fantastic option to consider. Let's talk about a brand that needs no introduction. Coca-Cola, ticker symbol KO. This beverage giant is recognized globally, and their iconic red cans are a symbol of refreshment and happiness. But beyond the branding, Coca-Cola is a dividend investor's dream. They're a dividend aristocrat, having increased their dividend payments for over 60 consecutive years. Currently, KO offers a dividend yield of around 3.1%, providing a steady stream of passive income for investors. Coca-Cola has been diversifying their portfolio, expanding into healthier options like bottled water, teas, and sports drinks. Plus, let's not forget about their global reach. So if you're looking for a global powerhouse with a long history of dividend growth and a brand that's recognized worldwide, Coca-Cola is definitely worth considering. Altria, ticker symbol MO, is a high-yield tobacco company. Yes, the tobacco industry comes with its fair share of controversy and ethical considerations. However, from a purely financial perspective, Altria is a dividend-paying machine. With a dividend yield currently hovering around a jaw-dropping 8.5%, it's hard to ignore the income potential. But those high yields come with higher risk. The tobacco industry is facing declining smoking rates, increased regulation, and ongoing litigation. Altria has been adapting by investing in alternative products like smokeless tobacco, and even cannabis through their investment in Kronos Group. So, here's the bottom line. Altria offers an incredibly high dividend yield, but it comes with significant risks. Let's dive into the world of energy infrastructure with Energy Transfer, ticker symbol ET. This Master Limited Partnership, or MLP, is a giant in the midstream sector. They own and operate a vast network of pipelines, storage facilities, and processing plants that transport and process oil and natural gas. Energy Transfer is known for its high dividend yield, currently sitting around 8%. But here's the thing about MLPs, they come with a unique tax structure. Instead of receiving traditional dividends, investors in MLPs receive distributions, which are taxed differently. They generate strong cash flow from their essential infrastructure assets. However, it's important to acknowledge that the energy sector is cyclical and can be influenced by factors like commodity prices and government regulations. Let's talk about a company that's all about supporting small businesses, Main Street Capital, ticker symbol MAIN. This business development company, or BDC, provides financing to smaller companies that might not have easy access to traditional lending sources. Main Street Capital is a dividend investor's favorite. They pay monthly dividends. And with a current dividend yield hovering around 6%, those monthly payments can really add up over time. They have a solid track record of increasing their dividends over the years, making them an attractive option for investors seeking both income and potential capital appreciation. Of course, investing in BDCs does come with its own set of considerations. Last but certainly not least, we have a company that needs no introduction. Apple, ticker symbol AAPL. This tech giant is a household name known for its innovative products like the iPhone, iPad, and Mac computers. Now, you might not immediately think of Apple as a dividend stock. And it's true that their dividend yield is relatively low, currently sitting around 0.6%. But Apple is a dividend growth machine. They've been consistently increasing their dividend payments since they reinstated their dividend in 2012. So, while Apple might not offer the highest yield today, their combination of dividend growth potential, massive share buybacks, and overall business dominance makes them a compelling option for long-term investors. So there you have it, my top 10 dividend stock picks for 2025. Remember, building a successful dividend portfolio isn't about chasing the highest yields. It's about finding companies with a history of dividend growth, sustainable payout ratios, and strong underlying businesses. Don't forget about sector diversification. Spreading your investments across different industries can help reduce risk and create a more resilient portfolio. And one last thing, always do your own research. This video is a starting point, not financial advice. Take the time to understand each company, their financials, and their future prospects before making any investment decisions.